Good morning, ladies and gentlemen. So it doesn't seem to be a very dry January at all, does it? So we've seen huge market volatility, with market turmoil at the start of this week, and now tensions seem to be easing. And that is why I'm joining you today from the White House. So we saw yesterday that Donald Trump decided to de-escalate the US-Iran war. He said only further and deeper sanctions would be imposed on Iran after Iran decided to launch missiles on US troops housed in Iraq. We also saw that Boris and the EU Commissioner decided to meet yesterday, and she gave a speech in LSE saying that the end of year Brexit deadline seems very unrealistic. We also saw that Tesco and M&S released their trading updates. Another strange thing was that Iran decided not to release the black box on the Boeing 737, which crashed unfortunately yesterday. And this is very suspicious. So does this mean that US-Iran tensions could be increasing? We're going to start by looking at indices. So you saw yesterday in the Asian session that things are very positive because of Donald Trump easing tensions. We saw that the Nikkei 225, the Australian index, and the Hang Seng all rallied. And this carried over into the morning session for the FTSE 100, which rallied 0.55%. US futures are also up. We see that the Wall Street is up 0.56%, and the S&P is up 0.54%. If we move to stocks, we saw that M&S reported their Q3 trading update, which was taken by markets to be very negatively and is down almost 10% this morning. However, M&S claimed that it was a turnaround. They saw like-for-like sales in their trading period rise 0.2%. However, clothing is still a drag, which fell below the consensus of 0.8% to minus 1.7% like-for-like sales. However, this is improvement on the Q2 clothing trading figure. If we move to Tesco, we see that Tesco's have more upbeat earnings. So we've seen this week that there was a supermarket slump with Aldi, Morrison's and Sainsbury's this week posting a fall in like-for-like sales. However, Tesco was resilient and posted an increase of 0.1% in like-for-like sales, and the share price has rallied over 2% this morning. If we move to FX, we see that the pound USD is flat, with neither the UK or EU backing down from negotiations. We also see that the euro has climbed a little against the US dollar, 0.11%, despite weak German data this morning. We also see that the USD Japan has climbed again this morning, up 0.21% after a 0.96% rise yesterday. This is because the Japanese yen is weakening with tensions easing, as the yen is considered a safe haven. If we move to commodities, we see that gold is down 0.59% and silver is down 1.03%. And this is with tensions easing again. Oil has started to make a little comeback. It's up over 0.7%, and this is with a huge sell-off after Trump's meeting. If we move to the bond market, we see that across the board bonds are up with tensions. Bond yields are up with tensions easing, so the price is falling. We see that the UK 2-year and 10-year are up, with the 10-year up more, and the US 2-year and 10-year also up, again with the 10-year up more. And then if we look at the German bond, we see that the 2-year and 10-year is also up, and with the 10-year up more again. Thank you for listening.